This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight Advisory Service. The advisory service is 3 segments, all in one advisory. So I'm covering the futures markets, commodity options, and futures spreads. This is Beyond the Spotlight, a video that will spotlight 2 or 3 markets that may become trading opportunities for this week. This week beginning with Monday, March 22nd, 2021. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Let's jump right into our first chart, and I'm looking at the June 30-year Treasury Bonds. You can see I have the beginnings of an inverted head and shoulders formation. This is a trend reversal formation. Currently, my MACD, this is my trend indicator, is down, but it looks like it's starting to turn around and head higher. That will be the case because I'm looking for this chart to trade up into this area here to set up that right shoulder so that we have the left shoulder, right shoulder, and the head. So think of a person standing on their head. So this isn't a setup just yet. Even if the market trades higher, I want to see the right shoulder formed, and then I'll redraw this trend line and then buying a breakout of that trend line. This is the momentum indicator. This is my stochastics. And you see there's some upside momentum. So again, I'm looking for the bonds to trade higher, but I just don't have a strong formation yet to trade this market to the upside. So I want to be patient. This may not come until end of this week or even next week, but I want to get this on the radar. The June 2021 30-year bonds, we've come quite a bit of ways from where we were to start this year, trading around the 170 mark, down all the way to about 152, 153 just last week. The second chart is for the May 2021 crude oil. This trade may set up pretty quickly this week. I was watching for a sell-off in crude oil, and boy, did we get that last week on Thursday. Trading all the way down, and I reformed this lower trend line, breaking out of this previous trend line I had drawn off. Then you see Friday we had a pullback. Today, right now, this is Monday morning when I'm showing this. It's about it's a doji bar, a bar of indecision. I'm actually looking for one more pullback down to this trend line, and this is where I want to get long, around that $60 mark. My target is all the way up at $70. There's a lot of economists calling for $70 crude oil, and that tends to be a self-fulfilling prophecy. Maybe we get out a little bit sooner, 68, 69, but that'd be great if we can get long around 60 or so. Depending on if the market pulls back and we get a bounce off this trend line, depending on where we get in, I can look at futures or the mini crude oil futures contract, plenty of volume and open interest in that contract. Or we can just look at the options market and do a call or call spread. Right now I have a little bit of momentum, about flat momentum. Right now trend is still down, so again looking for that one more pullback to this lower trend line, and then looking to get long the May 2021 crude oil. If this takes longer than a week, I may shift out to the June contract, but right now I'm focused on the May contract. And the third and final chart I want to take a look at here today is the June Lean Hogs. This was on the last Beyond the Spotlight because I still have this on my radar. I was looking for a trade to the downside, and you can see the market just continued higher. I made a new 12-month contract high last week, and now we are in a steep decline. The momentum is strong to the downside. The trend is turning over. All these moving averages are pointed up. And we had a nice big rally here going back to we were sideways to start the year, and then we really started to take off here. Looks like the middle of January, early February. So these moving averages are still pointed up. They should come down if we close below this lower trend line. That's what I'm watching for. Close below this trend line, and we're going to get short the June 2021 Lean Hog futures contract. So watch out for that one. Could come any day now. Stop loss would probably go above the 100 mark. Is probably a good initial, even though depending on where we close, we may be taking on a little more risk. There's a little gap here. We can go above that area. Downside target, though, is going to be between this level of support, between around the 88.5 and 84 price level. Get an 89-day moving average at 86.93. So again, it really depends on where the market closes and where we look to take the entry to make sure we get the right risk-reward ratio in place. But I think there's plenty of places where we can place a stop loss and place a target. So we'll just wait patiently for that trigger and then put the plan together. Quick look at what the Trade Spotlight advisory service looks like. It's an email service directly into your inbox. So you get the timestamp when it comes out, a write-up of the trade, precise entry and exit orders, so you know the risk-reward factors for any of the trades, like the Lean Hogs. I'll put together the trading plan before we get into that trade. Any pertinent information like margins and a chart that you can click to enlarge. If you're not following the Trade Spotlight, I encourage you to do so. I do provide a free 90-day trial offer. Otherwise, it's free to clients of mine and clients of the firm. Just go to danielstrading.com, click on advisories, and under technical analysis, you'll find the Trade Spotlight. You can read more and subscribe for free. Here's all my contact information. If you have any questions on any of the charts I looked over today, or just the markets in general, trading in general, feel free to reach out. Thank you for taking the time to watch and listen, and happy trading.